What's up, everyone? This is Sean.rampersaud here with the LendRamp Mortgage team at TMG, the Mortgage Group. Today, I'm going to be talking to you about how to get a mortgage if you're self-employed, okay? I know a lot of you are not claiming the right amount of income that you actually make, including myself. So, this is how to get a mortgage when you're not necessarily claiming on your personal tax return all of your income. Everyone knows that if you own a business, you can claim a lot of your income under your business, and the tax rate is much lower if you claim the income through your business. So most business owners are claiming a very small income for themselves and a larger income for their business. So this is how to get a mortgage when you're self-employed. Number one, find a mortgage broker like myself that knows and understands the self-employed mortgage process, okay? I'm self-employed myself. I get paid directly to my company, and because of that, I have to jump through the same hoops anytime I'm buying a rental property or personal residence, whatever that might be. So I really understand the self-employed nature very, very well. A lot of mortgage brokers, and especially bankers, don't understand this, okay? Any banker, none of them have been self-employed. They work for the bank. So one thing I can say is avoid going directly to the bank if you're self-employed, and deal with a mortgage broker that knows what's up, that knows what they're doing, okay? It's huge. Second, explain to the mortgage broker if you're incorporated or if you're a sole proprietorship. There's different paperwork that you need to provide for both of these, okay? If you're incorporated, the following paperwork is required. You're going to need your incorporation documents, so everything, including articles of incorporation, that type of thing. Your last 2 years T1 generals is a personal tax return. Your last 2 years notice of assessment, okay? They're going to want to see that your taxes are paid, and your last 2 years of business financials, okay? So the way it works for most incorporated people is they take your net income from the last 2 years, and they average that to create what your income is going to be to qualify for a mortgage. But there's other ways, and there's some tricks. There's some secret tricks that I'm going to tell you about. But that's the standard way of doing it if you're incorporated. Now, if you're a sole proprietor, they're looking at the last 2 years notice of assessment and your last 2 years T1 general. So they want to see your taxes are paid, okay, on your notices of assessment. And then they're going to use, again, the net income off of your T1 generals. So not gross income. Make sure you know it's not gross income. Next, ask about the stated income program. So for those of you who are not claiming much income but have decent gross income coming into the company, you can basically bullshit your income. It's incredible. It's an incredible program. But a lot of people don't know how to work this program, okay? It's called stated income for self-employed. Basically, you can put 5% down on a mortgage, and if you're a business owner and you have 2 years under your belt, so you've been incorporated for 2 years, I've even had a couple of people that have been 1.5 years, and I've gotten away with it under special circumstances and exception. But 2 years is kind of like the standard. So if you've been self-employed for 2 years, you have a decent gross income, and you're let's just make something up here. Let's say you are a mortgage broker, and you've got 2 years under your belt incorporated. I need to see your notice of assessment showing no taxes owing, and that's it. I don't need any of your business taxes or anything like that. I need you to tell me what your gross income was. So call it 200,000 gross income, and then I could claim, let's say, 80,000 as your personal income. So I can bullshit your income. There's actually a special program for this. This will avoid you having to claim a higher amount for 2 years and paying an excessive amount of taxes. Well, the standard amount of taxes, but excessive in your eyes, possibly, or your accountant's eyes. Anyway, so that's the stated income program. It is an amazing program, okay? Next, let's say you don't have 2 years under your belt and you've got a new business, 6 months old, incorporated. There's something called the bank statement approach, where I can take your bank statements from the last 6 months and estimate what your gross annual income will be, and we can use that to qualify. This program is through a B lender, okay? So the previous program is through regular banks. They can do it all day. This other program is through a B lender, and if you want to do that, you have to put 20% down, but it's a huge opportunity for you, okay? You can qualify for a large amount. You don't have to have any taxes done, nothing, okay? So you can qualify right away. The B lenders also have some of them have the stated income program as well. And again, you only have to be a few months in, but you have to put 20% down to qualify for that program. If you're newly incorporated and you have bad credit, I could still get you approved if you have 20% down. We have private lenders that we can go to. Now, that being said, I've done a bunch of videos on private lenders, B lenders, A lenders as well. You should take a look at those videos because there are different interest rates for all, and B lenders and private lenders tend to charge a fee. Usually it's about 1% to do a transaction, so it does cost you more money to go that route, but I can get you, I can definitely get you approved, okay? Finally, if you claim a strong personal income, we'll use the net average of the last 2 years for you to qualify. Then the bank will gross up your income by 15 to 20%. So let's say you're incorporated and you've got 2 years under your belt and you claimed $60,000 for the last 2 years, okay? The bank will do things. One of them is called add backs. So they'll look at your business financials and they'll say, oh, his truck payment that's on his credit bureau is coming off of out of the company account. So we're going to take that out of his or her debt, and that will help you qualify for more as well. They'll also up the number of your income. So say you claimed $100,000 for income. Your gross for the business was $200,000. They'll up your income to $120,000. So 15 to 20% is the norm of what they will gross up your income by, and this helps you qualify for more. Okay. This whole thing with being self-employed and getting a mortgage can be confusing, and you really need to work with somebody that understands it. I do understand it well. My name is Sean .rampersaud with the LendRamp Mortgage Team. Please call me with any questions you have. My number is 780-278-4847. I'm going to put all of my contact info in the comments below. If you like the video, can you please like and subscribe to the channel? I'm coming out with a ton of content that's very, very high quality, good information about mortgages and financing and real estate and that type of thing. And if you do have any questions, if you don't want to reach out and call, please comment below. I do answer all of those. Thank you very much for your time, and have a great day.